Hello, good morning everybody. Yesterday is 22nd of April 2019 and I'm going to take you through the market over today. So these are the trades we had last week. We actually took a sell from this point. The SOFA is still running. We had our level here. We had just a good support here. This was the level which we had. The price actually used it previously as a support. Then there was a false break, a support, a support, a support, a support, then there was a false break again. The same place was broken before we saw this break. So we took a sell while the price was here because there was an inside bar. This was an inside bar, the same place we had an inside bar when the price was moving on. So when price retraced back to this level, this was the best place to look for a sell from. So this sell is not only a sell just because that was a level. We also have, you minimize the chart like this. This is what we have. You can see that the price was actually making lower highs. This is what was happening. The price was making lower highs. So we expected price to continue even further to the lower side, which is this. We have a support, a resistance, and a sell place. And then there's still a resistance and a sell place. There's also this as a resistance and a sell place. And then we expected price to retrace back to the same place. We wanted price to do that the price should come back up. We expected price to pull back up to this level before we can be able to pick a sell from that place to the lower side. So if you can remember, the price actually retraced back up to that level. It did come up to this level, up to 1.13172, and we took a sell from that point. We expect that to push price to the lower side up to this level. So basically, we are seeing we don't have indicators on this side. This means we are only trading price action only, and we want that should price retrace back to the same level, just key levels, we will pick a sell from that point, expecting that sell to push price up to the lower side. That sell should go up to this point, but the reason I'm having my take profit here is because this was a key level where if price can clearly break below it, then that would be the correct place to look for a sell from again for the second time. So we move to the next chart, GBP USD. This is what we expected previously. We actually had a zone, a support, then price went up. It came back to the same place, a support, and then it went up before coming back to the same place, a support before eventually breaking below. So as long as the price remains below the zone we've marked, then this is still a sell. This is still a sell, and you're supposed to be looking for a sell even as you speak. As long as the price remains below the zone where I marked on Friday, then this is still a sell. Our main aim here is to wait for price to just retrace perfectly up to the same place. Let price try pulling back to the same level. We want price to try coming back up to this level. Then we'll pick a sell from that point up to the lower side. So if you're looking at this at the moment, then this is the place you're supposed to sell from. Notice we only have a good support. There was some false break, a support, a support, a support, a support, a support, then price broke below it. We want price to retrace back up to the same level. So you need to place your pending sell limit within this place here. Sell limit, and then have your first take profit, and then the next one should be here. So far on this set, we don't look at this level, so look at this, we look at this, and also look at this one. And we confirm that the indicator, we'll use MACD. The columns of MACD are shown below 0.00. So this is a sell. Basically, the sell-off began at this point. This is where the sell-off began, when the indicator actually went below 0.00. So your main aim here, now that the price has gone below this level, wait for a retracement, pick a sell from that point, your first take profit, and the next one. So we move to the next chart. USD JPY. USD JPY so far is a buy. The candle which we looked at, we had there's a pin bar last week. This one, there's a pin bar. This pin bar was to push price up to the resistance which we had here, but so far that has not happened. Instead, the price is retracing back to the losses. So this is still a very good buy. The idea here is to wait for price to retrace back up to the opening price of this pin bar. So if price can come back up to around 111.704, then that will be the correct place to look for a buy up to 114.073. So the idea, you should have your pending buy limit, have your stop loss, and then have your take profit at the top. We move to the next chart, SP500. SP500 is here. We load it afresh. It's not on my screen, so I have to load it. SP500 is here. So what I'd like to say is that this week's webinar, we're going to actually discuss SP500. We're going to look at it extensively, just everything you need to know about this index. So we'll look at the fundamental side of it, technical side of it. We'll add indicators to our chart. We'll also see the best where we expect price to be in the next few weeks. So on this one today, the first thing that I'm seeing here is that we are approaching a major resistance. On the weekly chart, we are approaching this as a resistance, and we expect that either price should bounce from this resistance or it should break above, of which, if this is true that the price is broken above, then the price is likely continuing upwards. And if price should bounce off of this resistance, then this is a sell. Assuming the price bounces off from this resistance, then this should be a very good place to sell from. So far this has been upwards. As you can see, we've been, even if you add these indicators, we've all been upwards. This has been upwards. We have the columns of MACD are positively above 0.00, and then we are also approaching a resistance line here, which price needs to clearly ascend above for us to confirm that we are upwards. Then if I'm to add another trend indicator, which is, let me add the moving average, 200 moving average. So how I came up with that 200, I explained it sometimes back when I was tackling how to come up with the period for your indicator. So this is the 200 moving average. Then I'm also going to add another moving average, which is 152. This one should be right. Let me give it a different appearance. So as you can see on this chart here, we have a positive move to the upper side. The price is positively heading upwards. So we expect that if price can break beyond the highest high which we've seen so far in the entire past of this index, then price is likely continuing upward. So the best you should do is to wait for price to do some, let price continue up, then retrace back to the same point, so that you can pick a buy precisely. This is what you expect to happen. So if you're looking at this chart and you want to trade it correctly, just ensure you understand that price has to break beyond the resistance so that you can confirm that we are continuing to the upper side. So we'll move forward. We'll move to our next chart, which is Brent oil. Brent oil is actively upwards, and from the indicators I'm having on this chart, this is 200. This is not one. This is 14 envelopes. This is envelope. This is a trend indicator, and it's called envelope. So from this indicator, the price actually bounced off of the indicator and is currently heading upwards. So we expect price to proceed higher. Let price continue upwards, and these are the levels to check for. This is a very good level, where the day that the price went above it, there was a confirmation that we're continuing upwards. We also have a level here, a resistance, it went down, a resistance, it went down, a resistance, it went down, since it went down, a resistance, and then price now is below. So we want the current move to the upper side to push price up to this resistance. It should elevate price up to this level. So if you look at this chart and you want to trade it correctly, just know that we are still upwards. Therefore, you should be looking for buy positions and only buy positions. So we move to our next chart. Let's move on. Currently, if you know what should happen, currently the best you should do is to wait for a retracement, maybe up to where this gap began. You want to trade this at the least risk possible. You should wait for price to pull back down up to this zone. Let price retrace back up to this level. A very good support, a resistance, a resistance, a resistance, price gap above it. So a gap above a key level means we are continuing towards that direction. So a retracement back to this level will call for a very good buy, expecting price to continue even higher. So if you didn't buy it while we were looking for a buy somewhere here, you can still look for a buy upon a retracement. So far the indicator we're having, this is showing us a buy, and then the one we're having on the lower screen, this one, is also showing us a very good buy. So the best you should do is to look for a buy position. Wait for a retracement, then pick a low risk buy, expecting that to push price even higher. So we move on. We move to our next chart, and that should be gold. And if you can remember, gold in the previous week actually recommended a sell. We said gold is supposed to head straight to the lower side. We want to see how that actually happened, how it turned out. So actually what we said happened. This was the line we had, and then we also had an envelope, and then we said that this was a support, this was also a support, a support there, and then price went below. So as long as the price was below that indicator, then this was a sell. So as long as the price remains below here 1293.06, this is a sell, except that we want price to retrace back up to this level, then we'll pick a sell again to the lower side. So far the price also successfully went below this level, which means we are now selling. A retracement, just the one we are seeing, this retracement will call for a sell up to somewhere around this point. So thank you very much. That should bring us to the end of today's market overview. See you again tomorrow at the same time.